Okay, we are live. Here we go. Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn. And what a learning experience we had today in the market. It was a wild ride. The S&P 500 from its intraday high to its intraday low was a 3.45% swing. And then it ended the day slightly up or practically flat. Did you take advantage of this dip we had in the market today to go shopping? Maybe with your shopping list ready in hand and maybe some nibbling? I did. I got Tesla, Generac, AMD. It popped right back into our buy box that we have for it, and Disney. So here we go. Quick take of the market, what happened today, why it happened, what to expect going forward. That's the first part of the video. The second part of the video is to answer your questions. So if you have a question, leave the ticker symbol and your question in the comments, and we'll be glad to go over it live during the show. So make sure you get those ready. I got the chat up and going so we can answer those questions. I know it was a stressful day in the market, but man, what a day to learn though, big time. And I have a couple of questions before we really dive into this. Number one, did we hit bottom today? That's a question number one. Question number two, was today's bottom a fake out, just like the bottom we hit on January the 24th and the bottom that we hit on February the 24th? Where we had those big wicks underneath the candle because we had a powerful buy the dip moment on those 2 days. Was today just like those two, or has something changed in the market? By the end of this video, you will have an answer, at least my perspective, on whether or not we had a fake out today, or was this really the bottom for the market? Okay, to kind of cover over this, as we do with everything else on this, quick take first, your questions later, and then if you do have a question while we're going through the quick take, that's fine too. So don't feel like you have to just wait until. All right, so as the S&P 500 successfully dug itself out of the bear market territory. I can say it because it actually happened earlier in the session. And just so you know, a bear market is typically defined or officially defined once you have reached 20%, a 20% decline from your recent high. So for the S&P 500, that high would have been on January the 4th intraday. The closing high would be on January the 3rd. You measure from that closing high down 20%, and intraday, we hit it today. Now, we didn't close 20% down. We closed about 18.1% down, at least for year to date. And if you go off the 3rd, then that is the year to date official. So we didn't close at 20%, but intraday, we did sink below 20%. And I'll look at that on the chart here with you too, so you can see. Real quick, I want to go to the weekly view so you can see something here as well. I'm going to take volume off the chart to make it a little more clear, but you can see here, we are now, for the S&P 500, 1, 2, 3, 4, 5, 6, 7 weeks in a row. 7 weeks in a row of losing in the stock market. Now, check this out. Remember the black line that we put on this? It starts over here, and this is a weekly view, so each candle represents 1 week. Starting on July 19th, 21, there's a candle over here that this matches up to. And then there's a group of candles right here going September, and then the first week of October. So the middle to end of September and the first week of October, they line right up on this black line here. And then if we pop over here to the February 24th, it matches up perfectly. And then if we look at this week, that black line acted as a resistance point, keeping the market down. That's bad news. That's bad news. But can we break back above that? I'm not so sure. So here we go in answering that question of, was today a fake out like January and February? I'm leaning towards yes. So we have resistance here on this line, and it's a line that's got a lot of reactions on it, and it lines up perfectly. Now our purple line on the bottom that's going diagonally across here, catching the lows for the year, for this year, 2022. We have it first on January the 24th, and then we have it for February the 24th, and then today, that wick came all the way down, touched that line, and then bounced right off of it. So this line is acting beautifully as a buy the dip reaction point for all three of the big lows of the year on the S&P 500. So this is quite fascinating. And this is one reason why I love technical analysis, because, I mean, things just get so precise sometimes that it is very interesting. Okay, moving off of that, let's talk about weeklies here. So for the S&P 500, down on the week, we can see that. It was actually down just over 3% on the week. If we hop over to the Dow Jones, I'll get that chart loading. It actually gained 0.03%, so just barely on the day. But that wasn't enough for the Dow Jones, as it posted its 8th straight weekly loss. And get this, this was the longest losing streak since 1932. 1930. You have to go all the way back to 1932 before you see the Dow Jones lose 8 weeks in a row. Man, historic times. That's a long time ago. Almost 100 years ago. I mean, not quite. More like 90-ish, right? Wow. Have to go back nearly 90 years to see the market reacting this bad, right? And you can see it is definitely in a downward trading channel here, right? And if we go, I'm gonna go to the daily here right quick, and you'll see this trading channel is really more defined. It's catching these lows, and I need to now take this low and bring it down here because we have a new low for the year right there. I'm going to take these other ones off. We don't need those there anymore because we have our low for the year right here. Man, big low. So today, it closed at 31,261, the Dow Jones. It got as low as 30,635 and as high as 31,515. So pretty big swing. Now, for the week, the Dow is down 2.9% on the week. Year to date, the Dow is down 13.9% year to date. Let's go look at the Nasdaq, see what it's up to. Weekly, it's still losing. It's in this nice little falling wedge pattern here. For the week, it's down 4.45%. For the year, man, this thing is getting close to 30%. It is down 27.4% year to date. The Nasdaq has just been beat up. And again, for signs of a reversal in the market, we need to see large cap growth turning a corner. And the Nasdaq has more of the large cap growth in it than the other main indices. So the Nasdaq is going to be the one to ride back up once the market changes, because you'll get the biggest gains from the Nasdaq. At least that's what my hypothesis tells me right now. So there's the Nasdaq, and I told you it was down for the week. Russell 2000. Let's pull this up. Still weekly view. The Russell was down 0.2% today, so it fell. On the weekly chart, it is down 1.08%. So actually not so bad on the week. And it's only been down 1, 2, 3, 4, 5 weeks in a row. So not 7 or 8 like the S&P, the Nasdaq, the Dow Jones. So small caps have been performing a little bit better here recently, which is interesting. Now, an interesting spot here on the weekly view for the Russell 2000 is that, yes, it hit a new low yesterday, but today it closed right on its 200-day simple moving average on the weekly chart. That's interesting. If we go back in history and look on the weekly chart, you can see back here, after we had our March 2020 big fall, yeah, it broke that 200-day moving average. But once it got back above it, it came down and retested it one time right here on in September of 2020. It did get a slightly under it, but it did stay above its 21-day moving average. So interesting. And then it just popped and it just ran until the beginning of this year. But now it's back on that 200-day moving average. Maybe that is an area of support here. And maybe that's why the Russell 2000, the small caps, were performing better this past week. I mean, look at SoFi and how it performed this week. There's a bunch of smaller cap companies that did pretty well this week. If we go back further, you can see here the 2018, in December 2018, it broke below the 200-day moving average, but not for long. If we look here, it stayed down here 1 week. It fell 1 week below, and then it took 2 weeks to climb back out and back above that 200-day moving average. Okay? We can go back here. Now, here in 2016, it was a little worse. It took several weeks before it still hit the bottom after breaking below that, but it broke below it. It hasn't broke below it yet, or closed below it, I should say. But here, it was several weeks down before we got to the bottom and several weeks to climb back out. Interesting, right? We can go back to this point in time right here in 2011, 2010, and then a huge one in 2008 because, you know, that was the housing crisis mess. So use charts, look at historical patterns and see what happened. And then, you know, maybe you can form your own hypothesis on what could potentially be happening right now. And there is a link in the description below to TradingView. So definitely click on that link and get your free account to TradingView. Wonderful. It's where we do all of our charting, and you can follow home. You can follow along right at home. I always say that backwards. Okay, moving on from here. Now, even though the Nasdaq and Russell 2000, even though they finished the day down, they both had buy the dipping going on. Is that even a phrase, buy the dipping? I don't think so. Dip buying. There we go. Isn't that better? They both had dip buying because they were well off their session lows today. Now, early on, risk sentiment was pressured by a failed rebound. Remember the open this morning? Let me go back to the S&P 500 here. I'm going to go to the 5-minute chart and put volume back on there because it helps us to see the days a little bit better. So here's today, right? This morning, over here, right above my head, we have this gap up in the morning. And then for the first 10, 15 minutes, the market was rallying. We opened higher today. And we rallied at the very, very beginning. And then growth concerns stemming from persistent inflation and supply chain issues hit. And the market fell. The early gains were largely sentiment driven amid a belief that the market was overdue for a bounce. And news that the People's Bank of China cut its 5-year prime loan by 15 basis points to 4.45%. Could you imagine if our Fed came in and said, all right, we're chopping interest rates, they're coming down? The market would rally like crazy. So there was a bit of confusion mixed up there. China cutting rates, market went up. Even Asian markets were up. Other Asian markets were up today. And then some European markets, they were up at the beginning. So our market decided to, oh yeah, let's go ahead for this ride. It went up, but not for long, because reality set in. And this is exactly what I shared with our investors on Patreon this morning. I'll show right here. This is the back end of Patreon. This is the letter that went out this morning to all of our investors on Patreon. Setting up, this was the title, setting up for opening rebound push. It looked like as though we were set for a rebound today. But then it faded, and then it didn't last. And there's some very specific reasons for why we lost so much today before we finally bottomed out just below my target here in the market. Now, just real quick, let me say this and then we'll move on quickly. If you would like this valuable content, just like this, sent to you every morning before the market opens to help you along your investor journey. We're all on it. We're all on our own investor journey. Then come join us. Just click the first link in the description. We'd love to see you there. Okay, moving on off of that. All 11 S&P 500 sectors were trading lower, but a nice rebound transpired in the last hour or so of action today, with no specific news to account for the rally. It was just purely people saw an opportunity, thought the market was extremely oversold, and jumped right in, including myself. Tesla, that was one that I nibbled, right? Not jumping in huge because I don't think this, even though we hit my target, right? Let me go back to the daily view. This yellow box here at the bottom, I'm going to take volume off the screen. This yellow box here at the bottom, this has been my target for months now. Since our snapback rally that we had at the end of March, this box has been on the screen for you to see every day. And when we were up here, people thought I was crazy for having a box 20% down. But here we are today, and we tapped it. We tapped it good. Now, the dip buying did help, but I'm thinking that today's dip buying, it could lead to a short-term rally, but we're not out of the woods yet, because with this yellow box, this target down here, I'm thinking, at least right now, I haven't seen any major signs to turn this around and say, oh, we hit the bottom, we're headed back up. Because there was no news today to send the market up like this. Just people buying the dip, just like what occurred on January the 24th and February the 24th when the market was just completely oversold. That's what happened today. As simple as that. So it's okay to do some dip buying in these situations as long as you're keeping your positions small. Okay, let's see here. Crazy day today. Absolutely. Bought a starting position in WGO, which is Winnebago. I like Winnebago. I'm just worried about gas prices for Winnebago. Lulu, your thoughts? We can look at Lulu. I also nibbled, ready for another dip. Absolutely. Thanks for the warning on the other warning the other day. You are welcome. You got the floor boxes set up nicely. Yep. A lot of studying, a lot of research, a lot of reading goes into all of this. I mean, my goodness, I didn't think I would end up doing so much reading. Okay. And that was years ago, by the way. That comment about so much reading. Yes, but this yellow box down here, I don't want it to how should I say this? The wick of today's candle went into that box, yes. And it bounced off this descending line here that matches up with February and January the 24th perfectly. All three of those wicks connect on this line. It is very, very beautiful. But I expect a candle in this box. The candle itself, not just the wick. And I have some reasons that I'll share for you for why. Now, almost done with this. We'll check on Lululemon and dive into that for a moment. Now, 6 of the 11 S&P 500 sectors did close in positive territory, including healthcare, which was up 1.3%, real estate up 1.2%, but the S&P 500 consumer discretionary sector, it continued its weakness, down 1.5%, because retail stocks are taking a beating right now. Ross Stores, ticker symbol is ROST. We talked about them yesterday. They lost big, over 20%, gone, 22.4%, gone, because they provided disappointing earnings results and guidance. Now, Ross was the latest retailer to highlight rising cost pressures, rising concerns over slower earnings growth, and the durability of the consumer with all these high costs. The consumer was strong at the beginning of the year. Right now, the consumer is being weakened. And by the end of this year, the consumer is really going to be hurting. I don't like having to say that, but I have to be honest. We're all feeling it. Prices for everything are higher. Some of us wanted to buy a house, got priced out of the market. Unfortunately, I don't think the pain is over in life with inflation or in the market. Now, shares of Ross, they dropped over 22%. And you compare that with a 2.2% decline in the Spider S&P Retail ETF. The ticker symbol is XRT. This is your basket of retail stocks, right? Down 2.2% today. And it's just been falling. Pretty steep. And if you look, I mean, this thing peaked in November of 2021. It has been falling since then. Because those who follow the retail sector, they know that there's a problem on the horizon for retail. You can only pass along those prices for so long before the consumer can no longer afford it. And that's what we're seeing right now. And that's why I say the consumer right now is being weakened. Then we have John Deere out of the blue here. I know inflation and input costs are doing some damage with John Deere, but farming, I mean, we need farming. And I know prices for used tractors were historically high, but John Deere got hit 14% today. 14%. Applied Materials, we talked about them yesterday. Ticker symbol is AMAT. They lost not as much today, only 3.9%. But both of them are cyclical companies. They're struggling after highlighting supply chain issues in their earnings report. Deere missed revenue estimates and weighed heavily on the industrial sector. It lost 1.1%. And then Applied Materials, it missed its earnings, its expectations, and issued downside quarterly guidance. We talked about it yesterday. And then in the Treasury market, there was some curve flattening happening. We look at the 2-year, go to US02Y, and we're almost done with the overview here, and we can dive into Lululemon and whatever other companies you'd like to talk about. But curve flattening today occurred in the Treasury market, and there were lower copper prices. That corroborates the underlying growth concerns. The 2-year yield, it fell 3 basis points to 2.58%. In the 10-year, it lost 7%. 7 basis points. US 10Y for the 10-year. It fell 7 basis points to 2.79%. And it's down a little bit further here in after hours. And then what did oil do today? Well, it closed out $110 a barrel. You can look at that by typing in USOIL, your US oil. That's the WTI crude oil, $110 a barrel. And look at this. I mean, it is right in its trading channel perfectly in this trading channel. And it's just moving up and going higher. The consumer just can't take these continued record prices at the gas pump and record prices on diesel fuel, shortages on diesel fuel. I mean, everything that we consume is linked to diesel fuel. So today's bounce was just the market was oversold. We're not out of the woods yet. Now, next week, we get new home sales for April and the preliminary IHS market manufacturing and services PMIs for May. I believe both of them come out on Tuesday, maybe. I can't remember the day, but they both come out next week for us to look at. Okay. Before we dive into your questions and Lululemon here, I just want to say that if you learned anything in this video today, then do me a favor by clicking the like button, clicking the share button, share it wherever you can. And if it's your first time watching, then definitely click that subscribe button. And if you like this information and you think it would be helpful to your investor journey, then click the first link in the description. Almost forgot there for a second. And join other investors just like you and me, where I believe there's a ton of valuable information. Okay, Lululemon, and then we'll just run with it for all of your other questions that you have. So, Lululemon, a growth company. They just went into the fitness shoe business not too long ago, within the last quarter, I believe. Their retail expansion. So they are a growth company. What are they year to date here? Down 30% year to date. That's not as bad as some in the technology space. All right, so you can see Lululemon's big fall. It occurred before last quarter, and then it had a giant spike last earnings report. How bad what did they do here? Beat EPS by 10 cents or 3%, and they were flat on revenue. And what are we coming in here at? We got $1.43 for EPS and $1.5 billion for revenue. Okay. So 12 days away for earnings. For Lululemon, we've got a rising profit margin, which is good on a yearly base. Quarterly, it has come back up last quarter. That's good. I would definitely be a little concerned, and I would on their margins. Okay, a small growth company like this spending a lot of money, and Lululemon is more of a, I guess I would see it as more of a luxury item, right? Well, consumers are getting hit hard. And if consumers are getting hit hard, then they're going to have to cut their spending. Luxury items are the first thing to go. My belief. And if we look at Lululemon on the chart, besides the big fall in March of 2020, I mean, it's been marching upwards pretty nicely. So where could Lululemon particularly fall? Well, if we go back to 2019 levels, and obviously it's above that, it's about $241 a share in January of 2020. It's up to $274 right now, down 30% year to date. It had some support here. I'm going to put this second line in to give a zone here for the most recent areas that it hit here. I think Lululemon has not hit bottom. On their earnings report, you got to pay attention. I mean, look at all these other retailers who have come through with earnings report this past week, and they have just gotten hammered, absolutely hammered. I'm honestly surprised Lulu was up a percentage point today. I would not expect, quite frankly, good things for earnings. Man, if I'm looking for a target for this, unfortunately, when we look at the chart, we want to look for areas that have a lot of reactions, right? And in order to do any type of trend line, we need 3 points of contact or more. And if you look here on Lululemon, after they V-shaped out of March and the climb in April of 2020, once they got back to 2019 levels, and let me get in closer here so you can see what I'm talking about. Once they got to 2019 levels, which was right, let me get my drawing tool, which was right here. Right about here was 2019 levels, right? This is about where they were right here. From that point on, Lululemon practically went straight up. And not until this first test here and then its second test right here did it start going up at more of a normal pace. right? You can see that. Unfortunately, since Lulu has broken this last support beam right here, where you see both of these bottoms, unfortunately, there's no support until you get down to, my goodness, I would have to say $235. I'm going to put a line there, $235. If Lululemon cannot continue to hold where it's at, then $235 is the next area of support. That's where support was here in 2019 and early 2020. Before that, and that's pre-pandemic. And then once it broke out, I mean, it went straight up, and it did not back test until it got up to $180, $190. So unfortunately, it's not looking so good for Lululemon. And I don't think earnings can be too positive. I can be wrong. I'm not 100% right. These are just from all the days of researching. All kinds of retail happening right now. It looks like, and let's go over to right now on the chart so you can see what I'm talking about. You know, it's up to 274 right now. I got to squeeze the chart down here to get to that 235. It seems like it's a long ways away, and it is, from today's close to that line, 235. That's about a 14%, 14.3% drop. And unfortunately, I mean, that can totally happen. Look at some of the retailers that reported this past week. It happened to them. And I don't think Lululemon's out of the woods here at all on this. Their shoe business, how is that going? That'll be a question to ask or something to look for in the earnings report, because they just recently started launching that. Are they having supply chain issues with getting them manufactured, getting them shipped out to stores? So they're going to have some weight on their hands and when they report their earnings. There's going to be some problems there. Let's see here. Wow, you guys are busy. Great job. Let's see here. Where should I pick up here? I told you market fell. All political reason on Musk. Today, nothing bad news except Musk scandal they created. Tesla sold off, down. Then market down too. Yep, absolutely. Today market should climb, but it made worst record in years. It sure did. Not that good at all. Let's see here. Gas is closing to $1.90 a liter in Alberta. Interesting. Nvidia looking good. Strong support in 150s. All right, let's check out Nvidia. Absolutely. And then we'll just keep going down the list there. Lululemon, what is this? I think this time Nike is better than Lulu now. People don't spend expensive sports gear now. That is very true. Puts against Lulu for earnings. Yeah, I would. I don't like to be too precise with what you should do with earnings. What you should do with options around earnings, because you can get burnt as quickly as you can get made. I just don't see it for Lulu. It's expensive. Consumers are being hurt right now. Consumers are not as strong as they were earlier in the year. When earlier in the year, like last quarter for Lulu, how much did they shoot up here? they went up. Let's see here. They broke that. 13.7% they climbed off of earnings. So I think this time it's going to be opposite. Consumers are being weakened right now. They're going to cut off luxury spending. That's the first thing to go. I mean, just think about your habits and what you spend your money on. I know we're investors, so we're probably pretty limited on the luxury items that we spend money on. But, you know, they get cut first. So, yeah, okay. Nvidia. Let's see here. We had a buy box for Nvidia set up. And it's getting close. It's getting real close. All right, so our buy box for Nvidia right here, it starts at about 150. And Nvidia is getting really close. Really close. If we look at this earnings next week, it's in 5 days. $1.30 EPS, 8.1 billion. How is supply chain? Has supply chains eased up any? You know, they typically nail their earnings, but even though they've nailed the past two, this overall market has been punishing. If you're looking for Nvidia, what did 150? See, we're on the same page there. Support, strong support in the $150 range. So that's what you have. My buy box starts at 150. It goes down to a low of 120. And this is, we went back here when we put this box together. And the tail end, make sure my head's not in the way here for this. All right, so this buy box comes in. If we look going back to August of 2020 through, what would this be, May of 2021, Nvidia was trading sideways within this area. Support around 120, and then the peaks were 150. So that's where this buy box comes from. And if we're looking for actual support for Nvidia, I mean, we've got to really go down to, man, really 140 to get good support, I would think. Even though if we open it up here on the daily, I mean, it's had two bounces here that have gotten to 157 today and 155 on the 12th of May. If we look at the weekly chart here, maybe this will bring it into focus a little more clear. We can open this up a little bit more. Just making sure I'm not in the way there. So right here, let me get the drawing tool out for Nvidia. Right here, these excuse me, these 2 weeks right here. That was a horrible circle. A low of 135 and a low of 134. That's where I think there's some decent support. 135, 134. This week over here, February 22nd, that was a low of 132. A low of 137. Let's see here. What was this one? Well, that's a low of 130. So I think there is some pretty good support. And again, this is a weekly view of the candles. And there's good support. And this one's at 137. So once you get 135 up to 140, That's probably the real area to kind of maybe go a little bit bigger than just nibbling. That would be my first thoughts there for Nvidia. It's almost there. It's not there yet, and I think it will get there. I think it will. Even though earnings are coming up, and earnings could be a surprise. Man, it almost got to that 150 today. It got to 157. That's interesting. AMD, it that popped right into our buy box today, and that's why I nibbled on some AMD today. Okay, any other comments here about AMD? Do you think the monkeypox headlines had something to do with the markets today? I don't know. I don't think so. I don't think so. I don't think enough people are paying attention to that yet. But they probably will. It'll probably catch on. But for the market today, I really believe today's market was all the retail reports were just garbage. They show growth is slowing down. And we've been saying, goodness, probably for 2 months or longer now, growth is slowing. Since the beginning of the year, I've been saying the second half of the year will be slower than the first half of the year. And since retail is now coming out and confirming that and saying, well, we got to lower our guidance because, well, the consumer is not going to pay these high prices. Walmart says they already see a behavior shift in what consumers are buying, and consumers are already cutting off discretionary spending. Now, Home Depot, on the other hand, they say people are still spending discretionary money on discretionary items, which, if you're going to Home Depot, you're probably more likely to do that because the customer base going to Walmart versus the customer base going to Home Depot, you have a lot of contractors and small businesses that still go to Home Depot, not so much to Walmart. So the budgets can be a little bit different between the two. But since Walmart's already seeing that, and Walmart is a discount shopper, the consumer is being weakened right now and hurt by this. Let's see here. So I don't think the monkeypox headlines had anything to do with it. The rebound that we had today, I mean, was purely the market was oversold. It was another fake out, but it was an okay time to do some nibbling. Because if we go back here and look at the 5-minute chart for the S&P 500, I mean, you can totally see, and I got to adjust this real quick. There we go. I mean, you can totally see today, we sold off in the morning, and then we just rallied into the close. I mean, this was a nice, strong rally into the close, but it was nothing but small position dip buying on oversold stocks. That was it. I don't think the had anything to do with it. Okay, next on here was, all right, I looked at, okay, let's pull them up. Go back to the daily view on the chart. Always like to start there. All right, Columbia Sportswear. Now, Columbia is a little more of a discounter than you would find with Lululemon. All right, let's see. I was looking at Columbia after seeing your video. It really looks like a good long-term investment. Think the price could come down more? Do you have a buy entry set up for it? Okay, great questions. I do like Colombia, and I think it's looking pretty good. Right now, Colombia, if we look on the chart here, and let's do this. I'm going to switch over to the 1 week here so we can get a little more history. So right now, it's finding a low this week around $73.51. So it's real close to that low right now. If we go back here to October of 2020 and November of 2020, we had lows of $74 and $73. So that's close to where the low came today. And then we have to go all the way back to here, April 2018, when the market was still going up. The low was 74. So if we're looking for a buy area, we're getting awfully darn close to it right now. And if I were to put a buy box for Colombia, let me do so right now. I'd probably start right here at about 75, being the top of the box. And then once I do this, you can see better where the connections are in here. And then for the bottom of the box, it looks like maybe about 72. Yeah. All right, so that would be the buy box right there. So somewhere 75 being the top, 72-ish being the bottom where I think there's good support inside this zone. So that's where I would start to look. But remember, only nibbles. Don't open big positions, especially for a new company. And Colombia is not a new company. New position for you with a company. Start small and build. Perfect example, right? When we hit the first low this year for Colombia, it was January 24th. Nibbling on that would have been okay. Opening up a small position. And then again, for here, it was a March 7 low for them. And they came right down to this trend line here. That would have been another good time to pick up a few more pieces, because now you're dollar cost averaging, small positions, lowering your cost basis. And then the past 3 weeks, I mean, it's kind of just been, I think, almost finding a bottom here. And again, that low was 73.5 and $74. So right between there, the past 2 weeks, it's found that low. Now, as this market continues and as we march towards earnings, which are still a long ways away, we just had earnings about a month ago, I would see if it would continue down this trend line and maybe stop off here at between 72 and 74 before we get any sort of kind of, turnaround in it. That's where I would be looking for. 72 to 75 in that range for Colombia. And they've got a lot of good businesses. Good business model. Been around for a while. And if we go back here on the daily view, I mean, you can see they've been following this trend line recently for the past few quarters, 6 months, I guess. But recently it broke down and it's been kind of trying to find a baseline here, support. If we look at earnings quarterly for them, Profit margin did drop a little bit last quarter. Revenues, everything dropped a little bit last quarter. But it's a good, strong brand name, not luxury for the most part. All right. So there's where I would put the buy box for Columbia. Nike over Lulu. Yep, Nike has got more. Nike does have its premium offerings, but Lulu is total premium. Yeah, the puts against Lulu for earnings. Do your own due diligence. That one, it's tough for me to say on that one. I don't think they're going to do very good, and puts for earnings would probably work, but it's your money, it's your call, not mine on this one, especially when it comes to options. Let's see here. Monkeypox, no, I don't think so. All right, Apple, Tesla. Yeah, hate to tell, but all retarded politics. Yep. Oh my goodness. All right, Apple and Tesla. Let's pull up Apple. Apple is a big one to pay attention to. AAPL, because Apple can just move the market. It's a big heavyweight. I didn't type it in right. AAPL is the ticker. Now, for Apple, let's adjust this a little bit. I'm going to take the volume away. It really stinks when you take volume away. All right, so we set some buy alerts or stock signals. Apple broke that 135 that we were talking about. It did not get to our second one at 130 because we're looking at Apple at 125. That's where we'd really like to get it. That low. If we could get Apple at 125, that would be great. Now today, it got down to 132. Pretty darn close. 132. I think it would have been okay to take a little nibble today on that bottom. That was a pretty big drop-off for Apple, especially when it's been holding up so well. If you measure from its top here on March the 30th, it's been falling pretty good since March 30th down to its bottom here for today. That would be 26.4% in 51 days. And year to date, Apple is down 22.5%. So it's fallen more over the past 51 days than it's fallen for the entire year. That's why I would say a nibble within our zones here that we were setting up would be a good idea. But for a market to turn around, we would really need to see Apple stop falling. Definitely. So we got our stock alerts still set. The 130, if that one goes off, taking a nibble. So that's where that alert is set for. So for Apple, under 130, take a nibble. Small positions. That's very important. Very important to do small positions. If remember that video that I was working on talking about what's worked so far in 2022, small positions was very key to the notes that I shared. Cash is still king. Bottoms like today, good days to take nibbles. Let me pull this up here. Tesla sold off on scandal. Yeah, Unfortunately, I think Elon has gone to the political fray, and he's upset the apple cart in American politics, and I think they're going to go after him pretty hard, especially with his comment about voting Republican. I think the lobbyists and the special interest groups, I think they're going to go after him pretty hard. I do believe I saw a allegation made against Elon in a headline yesterday. Oh, man. I don't like it. But you do need to stand up for what you believe in. Absolutely. Absolutely. All right, so let's get Tesla loading on the screen here. So I had it titled "How to Trade in a Bear Market." What's been working? Maybe I'll share this over on Patreon, because I have with our investor community there, because I haven't really gotten it going in video form yet. But let's see here. Cash is king. Keep it on the side. Small position sizes. It's been a lifesaver. Watch the VIX. What else did I write down? I have a bunch written down in here about volatility and using Bollinger Bands, because they're really good indicators of volatility. And Bollinger Bands, if you don't know, on TradingView, if you go to the indicator section right here and you type in Bollinger Bands, they'll show up and you can put them on. I use them. I have them blocked off right now. But there, I just added Bollinger Bands here. It's the blue line on top and bottom of the candles. When the Bollinger Bands are narrow, that means volatility is compressed. But the wider these bands get from each other, that means the higher the volatility is. The more the stock could swing one way or the other. They're really good to use when you're setting up for options. Okay, what else did I have written down here? I've got hedging written down here. You can hedge. Hedging is kind of like an insurance policy. It's not to really make money, but it's there in case an accident happens and then you make some money. But it's not really designed. It's like, for example, using the ETNs that I talk about. For the S&P 500, you have SPXS, which is if you think the S&P 500 is going to go down, then you hop into this. Now, in today's trade, if you go to the 5-minute, you can see perfectly how this would have been set up pretty nice. Let me take those Bollinger Bands back off for a moment. Okay, so this morning when the market had gapped up, this gapped down, right? There's a little hole right there. And this particular one is 3x. So when the S&P 500 goes down 1%, this goes up by 3%. So this morning, once the market started to head down, that's when you hop in. It continues to go down. This continues to go up. And then once you reach that point, once we, in the S&P 500, once it turned around at the bottom today, that's when you hop out. And then you can hop in SPXL. And this is, again, a 3 times. So it moves at 3 times the speed. And you can see that it really was noticeable when the market hit that bottom in the S&P 500 today. Right here, right about, what was this, 130-ish or so? That's when you would have hopped into this. And again, it's SPXL. When you think the S&P 500 is going to go up, you get into this. And then if you would have hopped in at the bottom when the switch changed and rode it to close, that's a nice 7.4% gain in 2 hours and 25 minutes. So these are the two that I use almost daily with all the volatility that we've been having in the markets. So these have been working off really good. Just use your technical analysis, use your cues, and I do them all on SPX for the S&P 500, whether I'm going with the shorter position or the longer position. Whichever ETN I use, I'm still just using this chart right here. And it's a pretty good gauge. Once we got down here and we broke below this, that was a good indicator that, and we got to that purple line. That was a second good indicator that, okay, I think that's enough for this market today. Let's see what happens. And I didn't get back in on the long until after the second pullback and then the retest and the bounce right there. Because there was a fake out earlier today right here. We had 10 minutes where the market was going up, but it couldn't hold it. And sometimes when you see these big candles like this, sometimes, the market just can't hold it. It's just some weird knee-jerk reaction that causes the market to do that, and then it could have fallen right back down. So I like to see it go up, pull back, retest, and then go. It pulled back twice because the market was unsure. But the key right here, and I can put a trend line here, and then I'll go back to Tesla right quick. You put a line across here like this. It doesn't match up perfectly, but it is. The lows here are making higher highs, right? Higher highs. That's a good sign. It was also on the top side of this. Once it turned around, it was making higher highs. And when you're making higher highs and higher lows, you're trending up. So use your trend lines, use technical analysis to make sure you stay on track. Okay, what do we have here? Oh, yeah, let's go over to Tesla. Go back to the daily view and pull Tesla up. TSLA. All right, if you haven't already, make sure you click that like button. That really does help. That lets YouTube know that you think this video has got some good information in it. Otherwise, nobody knows. Especially for small channels like this. All right, I got to scrunch this up a little bit here. Man, see, Tesla, I really think that 550 is going to come into play. I really, really do. Let me get rid of all the lines on here. There we go. See, Tesla, I really think 550 is going to come into play. I nibbled on Tesla a little bit today just to add to some because, it was just falling like a rock today. 6.4%. My goodness. $663 a share after this thing was so high. So high. 1,243. I mean, it's been cut in half. It's practically been cut in half. But as far as support goes, I really think 550 is an area that this could come down to. I mean, we're just over $100, $113 away from 550. I mean, it dropped $45 today. So 2.5 more days like today, and it'll be at 550. But if you look on the chart here, there is a little bit of support, well, quite a bit of support, I should say. What is this? 635. 630, 635. There is support. So the brakes will probably get pumped there. You'll probably slow down. And that would definitely be a good place to watch it. As a matter of fact, while I'm here, I'm going to go ahead and set a stock alert. And if you haven't done this yet, do it. On TradingView, just hit the plus sign over here on the price, very top line. Add alert for TSLA, and this is at 637.26. That's as close as I could get to 635. So I tap that. Now it's set. I'll get an alert on my phone. An email will be sent. And if I happen to be on TradingView, I get a little pop-up notification on TradingView that Tesla has now tripped my stock alert. And then I come in, look at the actual chart, see what's happening. Is it in free fall and I can get this thing for lower? Or has it kind of bottomed out here and it's flirting with this line? Should I dive in? So 635 looks like support. So now I've got a stock alert set for 637. When that gets tripped, then I dive in, look at the charts. Make sure you're using these. This is perfect. If you come across a stock, you think it's an awesome company, you've done some due diligence, and you just can't stare at a chart all day waiting for it to fall within your range, use stock alerts. They are very crucial, especially in this type of market where you can get excellent deals on things that are falling. So make sure you're using them. All right, let's see here. So Tesla, politics, yep. Next one up, VFC. Okay. Oh, yeah, now I remember. I forgot who this company was for a second. Now I remember. I do like this one. Let's see here. What can we deduce here? What is the stock? Man, look at those big ups and downs. All right, let's open this back up. Man, this thing was flying high right pre-pandemic. Okay, so a miss on earnings. Oh, that's flat. Not even a penny. 1.6% on EPS. Flat on revenue. So compared to other retailers, that's not as bad. What was one of the? Did they have a? Just looking in the description right quick. I couldn't remember if they had the North Face. That's right. North Face, Vans, Timberland, Icebreaker, Dickies. Don't know how to pronounce that one. Supreme and Kipling are their brands. I'm sure you've probably heard of some of those before. So yeah, I mean, North Face, very well known, kind of in the luxury item, kinda, not really, but they do have some nice stuff. Timberland, yeah. The Dickies though, that's your working class plumbers, electricians. They'd be into wearing Dickies. It's like Carhartt competitor. So some value there as well. So only on the daily chart here, only this one low right here of 44. Let me mark this right here, $44. Not setting a stock alert, just adding a line there. So it's interesting where it's at right now. That's real close to where it came on its March low of 2020. That was a low of 52, it looks like. 45. A low of 45. All right, let's keep going over here. I mean, this looks like a low for this company, a low of 46 right there. And then we have to go all the way back to the first time they got over this point, and there was some support here, a low of 44. So, I mean, it's getting really darn close to its historical low points, going all the way back to 2013. So from 2013 to 2022, 9 years, over the past 9 years, this has really been its low spot where it's at right now. This is a really good find right here. As far as the stock chart lining up, where the price is at, some of the brands that it holds. I'm liking this one. With it hitting these lows of $44, $45, several in the 44s, I would probably go ahead and set a stock alert for this one, and I'd put it at $45, and it breaks that $45, and I would start small positions, and then if it goes lower, a few more, and then, just dollar cost average way down. But it is so close to this historic low, and it's an historic low for 9 years. So you got a lot of history there to really judge where the stock can go. That's a nice one. When you find something like this on a chart, this is really cool. Because what is it down year to date? Let's see, 35% year to date. If you look at, let's just go back here to the 2017 low and ride it up to the peak of this before the 2018 fall. That's a 91.7 gain right there. 601 days, so just about 2 years ish, not quite 2 years, but for a nice 91 point, almost 2 years, 601 days, 91.7% gain. So not quite 2 years, maybe a year and a half or so. And 91% gain, that's really, really good. And it's setting up for something, I think, similar to that. This is a good one. As a matter of fact, I'm going to turn this into a stock alert right quick. Hold with me. Stock alert, $45. There it is. It is set. Thank you, Richard. Let's see here. Small amount for puts, not a Bing gamble. That's a good one. Let's see here. Yeah, I thought it was due to the not his tweets. Awesome. All right. Well, we'll probably wrap it up here. It is Friday night. I didn't mean to keep you guys over an hour, but I do appreciate the questions. Absolutely. Next week it's going to be more retail. So keep your eye out for that. We are not done with earnings yet. We've got a lot of earnings to go. And this market is just starting to feel some real pain. I think there's more pain to come. But just like, earlier this week, it's possible to get a relief rally at some point next week. When the market becomes oversold, rallies do happen. So I wouldn't put off that there's not going to be some sort of rally next week. I'm sure there will be. We just have to make sure that we're prepared and ready to catch it so we can ride that trade. Volume this week accelerated as the week went on. And I think that's something that helped with this afternoon's run up into the close. The market being oversold, more volume, helping to push it up. And there's just a ton of money sitting on the sidelines. So thank you. Will you post something for pre-market Monday morning? Yes, I will. Absolutely. Yes. I'm still trying to work my timing out, so I make sure to get that letter posted before in enough time before the market opens. So hang with me for a few more days while I get that timing worked out, because I start jumping into it, start writing it, and then all of a sudden, whoa, where'd the time go, right? So I got to get my timing worked out so I get it there. So just give me a few more days to work on that timing. But every day the market is open, I'm doing the pre-market note that goes out, and I'm going to try to do a midday note as well, and then we'll have our after the market closes live stream to go through. So make sure, if you have not already, join investors, just like all of us here talking, over on Patreon. And there's a lot of cool stuff. Always trying to add value when I can. There's a weekend, there's a post that came out before today's live stream. On Patreon, it kind of goes through just a recap of this past week and what happened. That's already been published there. This afternoon, when the market, when the S&P 500 officially went into a bear market, even though it didn't last, I published this note, which says we are in a bear market. This is the midday type of note that I want to try to get out there too. But we'll definitely have the pre-market, definitely have the post-market live stream. So yeah, so some good information in there, and I usually try to get as many facts as I can to back up what I'm talking about, and statistics, so you can feel confident too. Knowing that you've got, the best information to make the best investments. That's really what it boils down to. This is the one that went out this morning, setting up for an opening rebound push. And Didn't last. Didn't last at all. So yeah, definitely will be doing that. You are welcome. You are welcome for the live chat. I greatly appreciate you being here. That's what this live chat is for, so you can get your questions answered directly. And yeah, okay. So you guys have a wonderful weekend. I greatly appreciate your time. I greatly appreciate your engagement, and I greatly appreciate you. So have a wonderful weekend, and I will see you in the next video. Take care.